Okay, guys, so the next big key level that we're going to talk about is the 0.382 level of retracement. Let's go ahead and talk about it here by first drawing out a retracement of this recent move and tracking the levels as we go ahead and see this move back upward. So pulling out the fib retracement tool, remember you're going from left to right, from relative high or low, all the way to the next relative high or low, similarly to what we just did here. Now, we, of course, already talked about the 0.618 level as a turning point in the market. And if we are to get a huge rejection off that level, it's likely to see a continuation back downward if it is, of course, going to be a retracement of this sense. Now, the first key resistance on the way to the 0.618 level is the 0.382 level, which is this lightish green line right here. And basically, what this level is 0.618 plus 0.382 is, of course, going to equal 1. Now, when we're looking to use this in our trading, since this is the first key level of resistance on a retracement back upward, what we can do is we can play this in two different ways. What we can do is actually use this as kind of like an entry point for a move to the 0.618 level. Remember, we're playing from resistance level to resistance level, or when we get a break above, this resistance level would then turn into a support. And what do we know about supports? Well, supports offer buying opportunities, and then you would go ahead and buy at the support and sell at the resistance. So, how are we going to go about playing this? Well, the 0.382 offers a very strong opportunity to actually make a trade between the 0.382 and 0.618. Essentially, since it is going to be the first key level of resistance on a retracement back upward, what we're looking for is for a candlestick close above the 0.382 level. If we can get a candlestick close above the 0.382 level, one of my favorite things to do is actually scalp it all the way to the 0.618 level, which shows that where there is actually very strong probabilities of a move there occurring. Essentially, if we can get a move above the 0.382 level, it's very likely that we'll see a move to the 0.618 level, and we can profit on the difference in between. So looking at this example here, we'll first see that there is resistance at the 0.382 level when the retracement initially moves to it. It bounces back down. If you take a look at this retracement here, after the rejection, it actually went to the 0.618 level, but that is beside the point. This is just another example of how the 0.618 level is an incredibly strong level for a turning point in the market, especially after a reversal of some sort. Remember, if we can get a move out of a downtrend, typically we'll see a move to the upside, pull back to the 0.618, and then see a continuation back upward, which is why, of course, it would be a very strong opportunity to go ahead and buy here. But let's talk about this 0.382 level. If we can get a break and close above the 0.382 level, you can go ahead and take an entry to the upside with a price target at the 0.618 level, kind of like what we're seeing here, as this is going to be the next resistance. Same thing that is here. If we go ahead and just take a look at this retracement that occurs right here, we'll see that if we go ahead and draw a retracement out, you'll see we find resistance at the 0.382 level. Once we get that candlestick close above the 0.382 level, then you can go ahead and take an entry to the upside with a price target at the 0.618 level. This offers for a very strong scalping setup that you can use to go ahead and actually profit on. Notice we find resistance at that 0.618 level before we get a reactionary bounce back to the 0.382 level, which is what we'll talk about later in this video. But you can always scalp from the 0.382 level to the 0.618 level for a decently low risk, high reward type play. Looking at another example of this here, if we go ahead and just track this retracement back to the downside right here, we'll go from relative low all the way to the relative high. And notice we do find that we get this level of support right here along the 0.382 level. Now, a big thing to look out for is for the type of pattern that is forming along the 0.382 level. If we go ahead and look here, we have a left shoulder, which creates a high right here, and then a higher high that is created, and then a lower high that is created over here. This would, of course, be a head and shoulders pattern where we have a left shoulder right here, the head right here, and then the right shoulder over here. And as we know about head and shoulders pattern, the way you want to go ahead and play them is by waiting for a break and close beneath the neckline. The 0.382 in this case is acting as the neckline, and when we get a close below the 0.382 level right here, go ahead and establish a short position and play that down to the 0.618 level. Of course, this one actually did end up breaking to the 0.618 level, found support along the 0.707 before it did end up going ahead and reversing back to the upside. But this is showing you really the power of the difference between the 0.382 level and the 0.618. If we can get that close below the 0.382 level, like we did here, there's a very strong opportunity for price to move to the 0.618 level, as it did do in this situation, which is why, once again, this is a low risk, high reward type setup, where if we do get that close below the 0.382 level, it is very strong in probability that we move to the 0.618 level. And those probabilities are strengthened when we have a reversal pattern that is forming above the 0.382 level. We have this head and shoulders pattern, as we mentioned. The 0.382 acted as a neckline, wait for the candlestick close beneath the 0.382, and then we see a move down to the 0.618. Now, earlier in this video, we talked about the reactionary bounce off of the 0.618 to the 0.382. Now, essentially what that means is, since the 0.618 is a turning point in the market, what will typically happen is after touching along the 0.618 level of retracement, we will see a bounce to the 0.382 level, which of course would be the next level of resistance or support, depending on the direction that you are looking to make a play in. So if I go ahead and track this retracement right here, going from relative low all the way to relative high, first you'll notice we get that breakthrough of the 0.382 level here. Very strong opportunity to take a trade to the 0.618. But take a look at this. You can also go ahead and enter on the 0.618. And remember, we were talking about how to identify price targets earlier. Well, the first price target that I like to always play is from the 0.618 to the 0.382. Entering just along the 0.618, taking profit at the 0.382 because we do tend to get those reactionary bounces. Also, when you have something like this set up right here, where you have these two candlesticks forming a bullish engulfing type pattern, that is even stronger of a reversal pattern. And when you see something like that, it's very likely that we'll see a move to the 0.382 before either rejecting or continuing back upward. But since we don't really know what is likely to happen after the 0.382 level, unless we can get some further data, the 0.382 level offers as a very strong price target for if you're entering along the 0.618 level. And that would be referred to as a reactionary bounce off of the 0.618 level. Have you ever heard of a dead cat bounce? Typically where the dead cat bounce will go to, especially if it's off a rebound of the 0.618, is right to the 0.382 level, where we'll find resistance of some sort, and then we'll see a continuation of a further move back downward. Let's go ahead and take a look at another example of this. If we see this move right here, we have a very strong impulsive move. And if I go ahead and just draw out the retracement right here, going from relative low to relative high, you'll see that, first of all, we get that touch along the 0.618 level. If you go ahead and take an entry there, you could play that reactionary bounce directly to the 0.382 level, where you would just profit on the difference in between. You might be wondering, why don't you play it even higher? Well, since the 0.382 level is going to be kind of like a turning point, and remember, these are not exact levels, just kind of act as guides as to where to enter and where to exit. When you do play this bounce off the 0.618, the first level is the 0.382 level, and this once again is showing the reactionary bounce of these levels. Same thing here. If we just go ahead and take a look, we'll see that we have this very strong impulsive move followed by a pullback back to the downside. Now, if we go ahead, go from relative low of this move to the relative high, you'll see that we find support along the 0.618, and then we get that reactionary bounce to the 0.382. And look how clean this move is. You can go ahead and enter on the 0.618, sell at the 0.382, and get out of the position right then and there before looking for another potential entry or exit to occur. Of course, the 0.382 level is not going to be as strong of a level as the 0.618 level, but it does offer a very strong price target for if you are playing the bounce off of the 0.618 level. We're going to go over other price targets that you can use for if you're playing off of the 0.618 level, but for now, the 0.618 to the 0.382 level generally is a pretty strong move. And shortly in the next video, we're going to talk about how to identify a stop loss. So far, we've identified the entry, the exit. In the future, we'll talk about how to find a stop loss for this play to identify a pretty low risk, high reward type setup. But just know in this video that we went over, the 0.382 level can be played in two ways. It can be used as an entry point, where if we can get a candlestick closed beneath the level, kind of like what we're seeing here, you could play that down to the 0.618 level and collect the difference in between. Or you can go ahead and use the 0.618 level as the entry and play the bounce back to the 0.382 level. Basically, as a recap, these two levels act as very strong points for where you can take an entry and an exit, and you can pretty much play it either way. Just know the market tends to not really stop in random positions or random places. So when it does break below the 0.382 level, very strong opportunity for it to go to the 0.618 level. And when it does reach the 0.618 level, there's a very strong opportunity for it to bounce and play back to the 0.382 level. Anyway, that is all for this video. In the next one, we'll talk about the 0.707 level and the importance of this level right here.